Phoenix of the team.
All right, ladies and gentlemen, welcome back to another episode of Chart Talk. I don't know if you noticed, I got the fresh new Trading Experts green on. New shirts in the building. We're dealing with a very choppy market right now. Let's get right into the market outlook. So I got the S&P, the SPY up on my chart, and we're seeing the action over the past 1, 2, 3 weeks has been so difficult. Just an absolutely choppy environment. We're seeing a huge change in leadership, back to all the cyclical names, the reopening stocks, airlines, industrials. We're seeing energy names, oil. Oil is like $3.20 a gallon by me. Gas. But we're seeing the change in leadership. Today we're seeing the NASDAQ bounce back, up 4%, but we saw that we could see the huge fall it's had from highs. We're seeing, the Apples of the world can't really catch a bid too much. Amazon's still very weak, bouncing back today, but, overall, we've just seen, things like the XLE is absolutely raging. We look over to industrials, XLI, these are raging. Financials, XLF, still raging. So, the high beta, risky, NASDAQ, more of the fun names to trade, they're not really giving that action anymore. So, we kind of take a step back off them and just kind of change what we're looking at. But I've been pretty inactive the past few weeks. I've been pretty happy about it too. What are you thinking over there?
If you want to pull up that chart I sent you over. Yeah, so we've been seeing, again, along a lot with what Shake's been saying, we've been seeing a lot of these higher pivot lows, which is good action, meaning when the market comes back down, it forms a new higher low than the prior one. And as we come into them, we always think the market's going to crash, as we thought it was going to happen at the beginning of February, as we thought in the beginning of November. Every time the market's still up, we think it's going to crash. But as we keep putting in these new higher pivots, they're giving us these clear lines in the sand of when we actually should start to be a little more defensive. So we saw this recently, this past week or so. We put in a new higher pivot where the prior pivot low was 368 in the SPY. That second to left little blue arrow. As the market came in, it put in a new higher low. The low was 372, a few points higher. So until that trend breaks, we should expect to see higher prices. But now that we saw the market start to meet some resistance in this 345, 342 area, my thought is that we start to shift more to a range bound or a consolidation market, which we've also had back in September, in November before we went on this next leg. Consolidations are fine, they're healthy. For now, as long as we stay above 370 in the SPY, we're good. But as we start to get to 390, like where we're at now, we're starting to get closer to the resistance area where everything seems great and easy to buy, but you missed a lot of those opportunities. And like with Shake, I've been doing very little these last 2 weeks and very happy as a result of that. So that's my little...
Yeah, and that's just something that comes with time. I remember so clearly when the market was like this, when we were back at the trading firm, and we just had so much pressure on us to trade every single day. And it became some of the most miserable time of my life. I gave back all my profit from the easy times. And you just see the same kind of thing, the same kind of periods over and over where we had the easy money. Everyone and their mother was a professional trader a month ago. Now we're getting into the hard money times, and it's just not really time to push it as much. And, I think it's becoming very clear. And it'll be time to push it again, maybe a month, maybe 2 months. Who knows? But let the market tell you. Don't force the action. Save the account.
Yeah, and even the last consolidation that we had in September, it was 2 months. 2 months we traded in a range from 350 to 320, and then from there we went on a 4-month breakout. So,
right.
we had 4 months of a great market. You got to give the market a month or two to kind of push a lot of those weak hands out before we get that next leg through that big psychological level of 400 or 4,000 in the S&P 500. So with that, Shake, let's jump into some of the top ideas. First one we have is Unity Software.
Now, this thing has fallen from highs, huh? Down 50%, 3 months. Oof. Mm-hmm. So there are so many of these charts that look like this these are names like Lemonade, and they're all looking very similar. I'm not sure what to make of these names yet because this is a day that the market's bouncing. If NASDAQ gets all this money taken out of it tomorrow, I'm sure this continues to flush. So I'm personally waiting on this one. I think there are ones that have come in that look a little bit better. It depends your time frame. If you're looking on a really long time frame, maybe it's different, months and months out. But right now, I'll watch the 100 area, but again, not licking my chops at anything right now.
Okay. What about this Chegg? 90 has been like an area of resistance in the past. It's finally back below it. Would that be something you would look for, like a sneaky buyback up through that 89, 90 area?
I'll keep an eye on it. It's got a nice pattern, nice level there. But Chegg is again the online learning center. It's like it's supposedly like kind of replacing the online school part of it. So it's like we're seeing all the reopening names, Rage. We're seeing all the reopening stocks, lead the way. So is this where I really want to be right now? If it bases under this 90 for a couple weeks, then I'd buy it. I don't need to be the first buyer of this 90 though.
Mm-hmm. And what about this AMD? We see it holding. We see it's held support numerous times under this or above this 72. Would this be one you would look to take? Be up through 80 in time.
Maybe AMD's a little different. AMD is not like you look at those Chegs or that Unity, and they trade at such crazy valuations that it's tough to really. When they fall out of favor, you just don't want to be part of them. AMD is still a market leader, though, and semis have a lot of good sector news going on with the lack of supply there, creating huge demand. So I would buy this one, 79.80, over the other two that we saw.
Okay. Now, what about this Facebook? It's been in this tight little range this last week between 252 and 268.
I'm starting to really like this Facebook. I think Tyler Kinney was calling it out today. Mm-hmm. You look at what the Nasdaq's done. Facebook's one of the biggest components of the Nasdaq getting destroyed, and Facebook's just consolidating. So the second that Nasdaq can hold on to some sort of gains for more than a session, I would expect Facebook to absolutely explode because it told us it's relatively strong in the past few weeks.
Okay. Next up, we have UPS. It's been flagging at highs for the past 3 quarters under this, like 168 area. Is this one on your radar?
Love this UPS. It's funny, I actually bought this in my long-term account yesterday. I'm thinking about adding through this 166 area. Now, this is transportation, shippers and all that thing. Just more tells the reopening story. This is more a name I want to be long rather than the crazy high-risk tech names that are just falling so out of favor. So I bought this in my long-term account yesterday. There's 3 names I'm really long there. It's UPS, and then this NOC, and then, of course, my baby girl, DraftKings. But so I definitely like this UPS if it's one of the 3 names I'm long.
Okay. And next up, we have this WLTW, financial name that's flagging near all-time highs.
And now look how nice this chart looks. Yeah, is it the sexiest name? Absolutely not. Willis Towers Watson. But then you look at the chart. It just broke out of this huge base on earnings and has subsequently put an amazing earnings flag. So, it breaks this 230, 232 area. That's a chart I'd rather be long than you look at this Unity, and it's like I can see it coming back, but it's been nothing but down since earnings. So, this is like a perfect symbol of the rotation we've seen in the last few weeks.
Mm-hmm. All right, so that wraps up some of the top ideas. I had a few. Again, we talked some of those cyclical or safer names. We have this Walmart that's pulled into support recently that I'm keeping an eye on. Again, it's not out of the woodworks yet. Can more than likely still head lower. But this is one where I'll take a shot at it up through 130 versus that 126 low. Another one was this Honeywell, HON. Another name that's been flagging at all-time highs, Dow 30. And this is one setting up through this 212, 216 area. So these are 2 kind of safer names. Haven't really got beaten up with the market recently that are just kind of waiting for their next leg. Well, not Walmart, but Honeywell. So those are the member idea. Those are our top ideas for the week. And then Shake will jump into some of the questions.
So Bennett, what is the 10-step challenge?
So our 10-step challenge is a 90-day program that we offer for free to anyone who likes to join. You'll go through a 10-step process that we educate you from the absolute basics of how to create a watch list, what broker you should use, how to scan and find your first bull flag, how to form your game plan. And as you progress through these programs, these lessons get a little bit more difficult. By the end of this program, you will have done a financial plan. You will have created your own business plan for the year ahead. We'll go over your 401k. We're going to go over your IRAs. We will go over if you have children, your 529 or your TMA accounts. All of this we're going to go through these next 90 days. During these 90 days, you will not be trading a single share. You will not be investing. You will not be trading. You will be doing none of that. You will be simply just learning and educating yourself first. So that even if you were to leave us on day 89 or day 90 or day 100, you'll have enough knowledge to trade on your own and be proficient. From there, it's up to you if you want to continue with us and trade with us in our alpha chat. I know that's obviously up to you, but again, during that 90-day period, there's no cost. We will proactively check in on you once a month to remind you that, again, you're 30 days in, you have 2 months to go, you're at the halfway point, and when the trial is about to end. We'll remind you about a week early. So you have nothing to worry about. We're not here to try to get you to sign up where you can't quit. Anytime you want to quit, you simply email us saying you want to stop at the step you're on. We remove you, and you'll never get billed. If you do get billed, we'll refund you 200% if you didn't learn anything during that trial. So we've done this to make this as easy as possible and most beneficial for you, to help educate you. And eventually the main goal for us is to get more proficient traders in our group so we can all trade and find the best opportunities to invest in the market. So that's our 10-step challenge. Again, if you have any questions, just let us know and we'll help you out.
So, Bennett, what do you think members should expect in the Trading Experts 90-day free trial?
So the first thing you should expect is once you sign up, you'll get a welcome email from us, from Trading Experts, giving you the first 2 steps. First step is to download GroupMe. Second step is to join the group. And then from there, you will have the PDF of step 1, with the first 10 lessons you're going to go through. Your main goal as you read through each of these tasks or each of these lessons is to complete the task at the end of each lesson by posting your answers in that Getting Started chat. Everyone in there is just like yourself as a new trader. They're also learning alongside as you. And we have 2 mentors in there, Heaven and Tom, that will help you with any questions you have. And if you answer anything incorrectly, they will come in and help show you why it was incorrect. Myself and Shik are also in there as well. If you need to ask any questions, we're always there and we're available. But the main goal is to complete at least 1 to 2 lessons a day. We've worked over the years to make these lessons as easy and concise as possible. The average lesson you can read in about 5 minutes. The task will take you about 5 to 10 minutes as well. So if you can set aside 5 to 10 minutes a day, you complete 1 lesson over the next 90 days. We will have taught you 90 lessons that we learned the hard way, doing it the opposite. By going to the market and making these mistakes that cost us money, where you have the opportunity to learn from our mistakes, learn them firsthand of what to avoid, what works well, and all of this costing you nothing throughout the process. So expect that first email. Make sure you have GroupMe downloaded. Make sure you have the Trading Experts app that's on the App Store, also download on your phone, and keep an eye out for that first email.
Why don't you trade options?
Can you pull up the that chart I emailed over to you? All right, so this was actually from someone who was looking to teach people how to trade. I spoke to this individual yesterday. He was trying to teach people how to trade options, yet he was telling me he was buying stocks, and he sent me a screenshot showing me the calls he bought. And this is like a prime example of why we avoid options. And a few factors. One, majority of options expire worthless. You know, there's this. You can see. You look up the stats. About 90% of options will expire worthless at expiration. So people go into options looking to hold till expiration, or even trade them. They don't understand the things that are going on behind the scenes with these complicated financial products that Shake and myself couldn't even explain if we tried. But in this example, this individual bought 2 calls in Ford, expecting to go to $15 in the next year, and then KMI, expecting to go to 15 again by the next year. Both these stocks, again, we avoid these cheap stocks, especially with options. You need volatility, you need stocks to move. If they were to trade options in Tesla, they'd be way more better off than trading in a slow mover like Ford that's going to move 10 cents a day, which compounds this issue where this person is investing or gambling $800 in these 2 calls. A year from now, they both will be worthless. Again, KMI has been a stock that's been dead for almost a decade, and Ford has been the same thing. It's been a $5, $10 stock for the last 10 years, if not longer. So this individual is expecting these 2 companies that have been basically dead or non-existent for the last decade to miraculously come back to life in the next year because they bought it. Now, in a year, this $700 will be gone. Had they just bought the stock themselves, if they just bought Ford and it went to 15, like they think it's going to, with that same $300, they would have made $60 or 25%. Where with this call, if it goes to 13, drops to 10, and then a year from now gets to 15, the pricing of this option is going to be all out of whack. So even if the stock gets to the price you think it's going to get to, when the stock is moving up and down until it gets to that point, that's where these options, they just decay. The price just continues to come down. And over me and Shake's career, I can't think of one successful option trader, but we get endless and endless and endless DMs of these guys who lose 100% in the first year with big sums of money. Guys starting with 20 grand, a year later they got 1,000. Guys starting with 100, with 2,000, because these things are designed to go to zero. And if you can't simply trade 1 share of Ford and buy it at 13 and sell it at 15 and make $2, if you can't do that, but you're expecting to buy a complicated contract that's leveraging a small amount of money, it's just, you're fighting an uphill battle. This is why we don't allow anyone to trade options. If we find anyone who is trading options in Trading Experts memberships canceled, we don't allow it. It's just, we've seen too much destruction relative to the people that actually make money. And it's just way easier to avoid it and kind of start with the simple stuff, just like buying the share of Ford, even though we wouldn't buy it anyways, over buying the call that will expire worthless in January 2022. So again, we avoid it. We just typically see a lot of new traders that run to it and just blow up their accounts as quickly as humanly possible once those things expire. So that's my take on options. Shake, if you want to jump into good and bad trade, I know it's going to be very slim since both of us have been doing not much from a trading standpoint.
Yeah, no problem. I'm trying to think what I really put on. So I covered this. I got short this Peloton. Where was it? I got short this day here, March 3rd. We were looking at this as a long, and then we saw it put in this Hart's reversal on March 2nd, and it coincided with just seeing a destruction in all these lockdown stocks. Peloton's like a lockdown stock. It benefits from us being locked down. So I'm shorting this, and I only gave it a highs here. I shorted 116, gave it to 118, and I covered a lot these 2 days, March 4th and 5th, Thursday, Friday, yesterday. But again, I'm not really doing that. So I'm out of this one. It's starting to look like a long, but just waiting on these things. I bought some as NOC for the long-term account. It's right around my price. My price is this 304 area. So this one's a long-term trade. This is, I'm looking to, sell this at 350 in like a month or two. Mm-hmm. And then what else? I got this DraftKings. And what was the third stock? DraftKings. Oh, and then UPS. Love this UPS. Love shippers this quarter. I think if this one gets above this 168 area, it really gets going. I have a small position, looking to add if it tells me I'm right. But that's really it. Again, the best trade I've done is not too many trades, and my account's still very close to all-time highs. Not at highs, but very close to highs. My mental capital's all there. I'm not freaking out, pounding the keys every day. I'm waiting for my time to strike. That's it.
Yeah. So I'm, again, same thing, been doing very little. Today, got into this ROST. Again, I'm actually kind of annoyed because, again, I don't like to typically chase these bigger moves. I wasn't actually really expecting this to go today, given that the action it had. But again, I had a buy step in, it got triggered. But it's just very wide. Like it's, the real out, is verse, 108, and I'm buying 124. The fourth day up, like this is a trade that, I'm almost annoyed that I'm in, even though it's higher than my price. And given that it's just so extended, like I can't give this the proper room where I basically don't really want to even be in it. I'm just giving my stop versus 124. It is a random stop. It's not, even versus a low a day. But it just, that one time, or the 1 out of 10 trades with a buy stop that it just gets you triggered in a trade you don't want to be in. This is one of those situations where, again, I'll probably break even this trade. It's gone too much too quick, and I wasn't expecting this to go in for the order to get triggered. So that was one, again, break even stop. It'll be a nothing trade. The only other one.
Then you look at this name. Look at the name you're in. And you're in the right sector. It's retail, reopening. This everyone's getting the stimulus check. Where they're going to spend it? Spend it on things like retail stores or going out and things like that. Yeah. So you're just seeing like the Unity software. It could come back but it's more of a bottom picking play where it's like the money's going into these Ross stores right now, and that's it. Just is what it is. Can't fight the price action.
Even with that Ross, if you draw like a horizontal line over 124, you can see that at the start of the pandemic, or pre the start of the pandemic, the high at the time was 124. This thing got absolutely decimated. It worked its way back to 124 again. Still too early. It pulled back to 108, went back up to 124 again. And all this time, we are simply just looking to buy above that high. It couldn't break 124. It has not broke. We simply want to get in when it does break. When it does break, the path of least resistance is often higher. Will this raw storage trade higher? More than likely. But with my price being 124 and it being up, almost 20 points in 3 days, the probability of it not being below that 124 is much higher than it just continuing higher every day. It could, if it does, that's great. But I'm okay with giving this away as a break-even trade because it's just too extended. My price is just too high relative to the real out. And this kind of leads me to BABA, which was a similar trade. not as extended, but this was a name we spoke about again about 2 weeks ago when we were buying this 270 breakout that just never matriculated, just never happened. This is a trade where I took off a majority of my position. I sold about 90% for about break even, maybe a 0.5% loss, and I kept a small position basically with no hard stop, waiting to find a new entry point. And this was one, it's sold off for basically 2 weeks, and I was simply looking to buy above the next, the prior day's high. And this was today. So we saw yesterday, it looked horrible, it closed at low a day, looked disgusting. I was simply looking to buy above 237, which is basically at right now. It's taking out yesterday's high a day and the prior 2 days highs of days, which is something it has not done that whole time it was dropping from 270 to 220. Now something is showing us differently, that it's now taking out those high days. And now I know with that stock that I just bought today from 237, my out is versus 226. I'm risking about 10 points in BABA. But again, this really isn't a trade for me. This is not something like that ROST that I'm looking to get out day one. This is where I'm trying to build back into that position that I had at 270, but at just a much better price. So again, this was really the only other thing. And then lastly, again, was this Amazon. Similar thing. We were buying this around 3,300. It just never went. We got up most of the break even. And we tried it once versus 3,100, another break even trade. And I'm looking now again to pick up some Amazon up through 3,100 if it gets there versus 2,900 to be prepared if Amazon does want to break it higher later in the year. So again, not a lot of active trading. The only two really was this Amazon and BABA looking to kind of build back into it. And this ROST was just kind of the downside of having a buy stop in a name that just got extended and wasn't expecting it to go. But again, should not lose money in that trade. I should break even. And at worst case, unless it just, gaps down tomorrow and it pushes me out. But yeah, just sitting on cash and just waiting for the easier trades or focusing more on those down names like we talked about, like the Honeywells and the Walmarts.
Yeah.
So with that, Shake, you want to jump into book of the week?
Do you want to start us off?
Yeah. So again, this was, we've already talked about this one, but this was the first book that we sent out to, it's The Richest Man of Babylon, to some of the members that are in the little Alpha Book Club that we have. So this is the first book that we sent out that they're all reading now. Again, this is a timeless book, very easy read, but I'm still pushing through Power vs. Force, which you tricked me into reading. So I'll be done with that hopefully in a week, and I'll be on to some easier books to read that I don't get tricked into your recommendations.
Ha.
So what are you reading?
So, I'm not sure if I gave this one out before. This one I check into every once in a while. The Almanac of Naval Ravikant. He's like a modern day philosopher. He's all these great things. He got initially famous off. He had this tweet storm. It was a podcast, but he turned it into a tweet storm that said how to get rich without getting lucky, and it was just like all these kind of life rules about growing and expanding business and how you kind of have to either start your own business or do all these other things. So he's very entrepreneurial. He started angelinvest.com. He's an angel investor. But this just kind of breaks down all his philosophies. So it's pretty good. The Almanac of Naval Ravikant.
I like it. I'm going to have to pick that one up.
That one's worth your time.
Yeah, I was going to say, I'm a little bit buying it right now. All right, I think we wrapped it up.
Wrap it up, B. All right, cool. See you guys next week.